Hey, what's up everybody? It's Wes Pauls. It has been a minute since I have been online here, and I apologize. Life has been busy. It's been a crazy real estate market, and today, this video, we're gonna talk a little bit about the crazy market and how it affects you. Stick around. Okay, so as most of you know, I am here in Ontario, and the real estate market has gone absolutely batty. It has gone absolutely kind of like Bitcoin. It has gone almost parabolic. It has gone like this and then like that. So, for example, if you're looking to buy a house in my neck of the woods in Southern Ontario, it's very difficult to go in there and realistically look at a home and go, it's listed at $599. What a great deal. I'm going to put an offer in. The problem is real estate agents now have decided that we really don't need to list it for what it's worth. We're going to try and spark an absolute crazy bidding war. And to be honest, for the seller, that is perfect. Think about it. You want as many people through as possible. So if your home is worth $700,000, we're going to list it at $599 and get a slew of people in here. Yes, some people won't be able to buy it, but some people are going to say, well, guess what? This has value to me. So I'm going to go ahead and put a bully offer in for $700,000. The problem is, so is everybody else. So now a listing at $599 ends up selling for $830,000. Let me give you an example of a home that I tried to purchase the other day for $689,000. I have been in the real estate game. I've been in this particular industry for over 20 years. I feel like I've seen mostly everything. And so when I go to a house, I feel like I have a pretty good understanding of what its value may be. Now, I go to this property, big 75 by 200 lot, which is really important to me. So when I'm buying a house, side note, a lot is extremely important to me because it means in the future there are other things that I can do. If the trends change, the types of homes in the area change, I can always adjust because my lot size is larger. Anyways, I digress. I go to this house. It is an up and down duplex. It is an illegal duplex. What is an illegal duplex? Well, an illegal duplex is basically a single family home in a single family zoned area that has been converted into a duplex but hasn't been done properly. It hasn't got proper permits. It doesn't probably have the proper fire separation. It only has one furnace. Maybe the plumbing goes through, etc., etc., etc. There are multiple reasons why it is an illegal duplex. So a legal duplex versus an illegal duplex, I always take the legal duplex simply because it's going to be worth more and it's legal. So I go into this property and it's nice-ish. It looks like a lipstick on a pig type of situation, but to the most people, they're looking at it thinking it's beautiful. The rent was there, it's serviced. So it was listed at $689 and they were accepting offers of, basically saying we're going to hold offers until Friday, trying to generate a bunch of interest, and then boom, everybody submits their offers the same day. However, they've also said we'll accept preemptive offers, which is a bully offer. If you want to come in, give us your best shot, we will go ahead and take a look at that without looking at all these other offers. So I went ahead and did that, and I think I asked maybe $30,000 over, firm, and no conditions. I'll close it in 30 days, call it a day. So they looked at me basically and laughed and said, not a chance. Now, if you're just getting in the market and you see that it's a $689,000 listing and you offer, say, $720, in your mind, you're saying, well, you're only asking $689. I'm giving you $720. Why would you not take it? Because they know it's not worth $689. It's also just a tactic to get people in. This house sold for $926,000. $926,000. It's an 1,100 square foot bungalow on a septic system. Probably built in the 1950s, maybe 60s. Mind-boggling. Now the question is, are these homes worth it? I don't know. Are they? You are the only person that can decide whether or not a house that you're looking to buy is worth it. I'll give you an example. If you have a home in your mind that checks out all these boxes and you go to buy that home and it's your dream home, but the houses are going for such a high value, you're almost like, well, it's not worth it. Or is it? Anything is worth anything. It's worth whatever you're willing to pay for it. A value of something is worth what anybody's willing to pay for it. So is it too high value? Is it too much of a higher value for your liking? If so, it's not worth it to you. Having said that, if it's something that checks all your boxes and you've been searching for 5 months and you feel like, hey, this is the house I need to live in, well, guess what? It's worth it to you. Now, we're seeing a bunch of people come from out of town, and I am purchasing in other towns. So a lot of people are angry that, we're in, Southern Ontario, we're in the Hamilton market, that people from Toronto are coming in, putting in crazy bids and paying things way over asking. Okay? Well, you have the opportunity to go to another outside town and do the same thing. Yes, it stinks. And we all agree that when people come from other towns who have a lot more money, we all get bent out of shape and say, well, this is ridiculous. Unless you own a home, of course, in which case you think this is wonderful. My home is now worth a ton more because everybody wants to live in my city and therefore pushing the prices up. Will this last forever? Here's the thing. Again, I can only speak for my area, and I'm sure it's similar to places in your area where you live near a large metropolis. So we live near Toronto, and Toronto is a huge metropolis, as everybody knows. So if you live in a suburb of Toronto or the outskirts of Toronto or within 35, 45 minutes or a train ride away, then you technically are in an area that is probably much lower value than Toronto. Well, that means Torontonians are finding value in our homes. Our house that's 2,000 square feet is 800,000, and the same house in Toronto is 1.4 million. So who wouldn't want to say, look, I'll take a train ride for 45 minutes and I'll save myself $600,000, $700,000, $800,000. If you're willing to do that, then that's a smart decision on your part. So the question is, will it last? It's hard to know because in our area, we're just catching up to surrounding areas. But with interest rates as low as they are, it makes it hard to really suppress this growth. If interest rates start to change, if inflation starts to grow and get out of control, interest rates are going to rise. And if interest rates rise, less people will be buying and house prices could see a drop. Now, it's not the same as it was in the 90s when the house prices absolutely plummeted. I don't believe that's going to happen. I believe we're going to have a stabilization at some point, but I don't see house prices dropping like crazy. Okay, so if you're going to get into the market, stop trying to plan it. Stop trying to guess if it's worth it. It's got to be worth it to you. And that's the most important part. If you decide that you want to buy a house and flip it, value is super important. Let's be honest. For all of us flippers out here, we want to make sure that we get a ton of value in the beginning, maybe some instant equity in the beginning so that our as repaired value is going to be much higher. We take our profits. But if you're buying a house to live in and actually stay, let's say for 10 years, what does it matter? Why do you care if you paid an extra $30,000, $40,000, $50,000 for a house that met all of your criteria, that you absolutely fell in love with, and you're not going to sell for a long time? It doesn't matter. So for all the first-time home buyers that get it in their head that they have to get a value, that they have to play the game. They saw on TV that you barter back and forth with the seller. You barter back and forth with your bank on the rate because you've seen it. That's what you think you're supposed to do. I'm going to give you a little advice. Please stop doing that. Please stop thinking that you have to play some sort of game. Buying a property is important. It's an asset, it's an investment, and you want to get the best deal possible, of course, right? But saying that is redundant. Like, of course, that's just the truth. But it doesn't mean that you're willing to sacrifice that dream home of yours because you didn't want to pay an extra $10,000 on a $1 million home, right? Just to be right. Just to say, I told you so. That's very, very expensive because when you let that house go, and in 10 years from now, when that $1 million house is worth $1.6 million, you're going to say, I wish I spent the extra $10,000 on that house because it checked all my boxes. Okay? So this real estate market can be tricky and it can be hard to navigate through. But you've got to stop listening to the outside noise and start listening to your gut and start understanding that an asset like a home is something you can keep for a very, very long time. You're not going to flip it and sell it tomorrow. Again, unless you're an investment property holder and that's what you do. You flip properties. Well, then this may not be the best market for you. You may want to take a seat over here and just wait till the market suppresses a little bit. Okay? So the other thing that I wanted to talk about is essentially the mortgage rates and how they're affecting things. okay? So if mortgage rates do rise, like I mentioned a little bit earlier, what's gonna end up happening is people are not gonna be as excited to go out. When your rate is 1.8 versus say 2.5, even though 2.5, I need to take a side seat here. I couldn't tell you how many people have said to me, you know, between 1.8 or 1.9 or 1.7, oh, that's pretty high. If anybody has ever bought a house in their life and has had a couple of mortgages in their life, knows instantly that 1.8 is free money. 1.5, 1.9, 1. It blows my mind that someone says that is too high. Interest rates are at an all-time record low that they've ever been. It is free money. So if you complain about interest rates being 1.8, go ask your folks when they were paying 11, 12, 13, 14%. When I first started in this industry, a 5-year fixed rate term was 6.9%. Okay, 6.9% was a good interest rate. And if you had told those people they can get 1.8%, they wouldn't believe it. I wouldn't believe it. So we got to stop nitpicking and understanding that the rates are so incredibly low right now that it's a great opportunity. So when they rise, things will slow down. It's just the way it goes. And we do go in ebbs and flows, and we do have cycles. Right now, we're in an absolutely crazy real estate market, similar to 2017. But when rates rise or government policy steps in or they decide to tax homes differently, which they have done before, then things will slow down. So try not to time the market. Try not to decide for, let some other person decide for you whether or not you should buy the property. Stop trying to get your head around this house shouldn't be worth that. If that's what it's sold for, then that's what it's worth. And we have to understand that that's just the market that we're in. Okay? And I do hear this a lot. Like, this house isn't worth, I say it a lot. This house isn't worth it. Well, it was to that guy. And I'm willing to wager that in 5 years from now, that house has gone up even more. And a lot more. Because real estate is a phenomenal asset to own. As anybody knows who follows me or has done business with me or knows me personally knows that real estate is a massive, massive chunk of my portfolio. So if real estate is, to me, is the best way to build wealth, and then you've got, subsidiary sort of investments in your stocks and bonds and cryptocurrencies and, to name a few, but real estate is the way to go. So my advice to everybody out there who's going crazy is stop trying to time the market and just hop in. Okay, the water is warm, just jump in. And be careful of the advice you're getting from people who don't understand. Okay, I'm actually just trying to roll this through in one take. That's why I'm just sort of rambling on. I'm trying not to do any takes whatsoever. This is just sort of this, goal I came up with this morning. So bear with me if I stutter a little bit. But the advice that you get from other people is always coming, in most cases, coming from a great place, a good place in their hearts. They're trying to help you and help you understand that you need to make this sort of decision. But at the end of the day, only you can make the decision for you. You want to take heed of what they're saying, but if it doesn't fit your game plan or what they're saying to you makes sense, but if you listen to them, you're going to lose this house, then just take a step back, take a breather, and understand what you're losing or what you're gaining by taking their advice. For the most part, it's great to get advice from family members. The problem is they haven't always been there. And I've said it a few times before, but it's like taking financial advice from a plumber or taking plumbing advice from a financial advisor. Now, that plumber may be an unbelievable financier and has done it his whole life. That's the anomaly. Or that financial advisor may be an unbelievable plumber. Again, an anomaly. The point that I'm making is typically if I'm going to go fix the sink, I'm not calling my financial planner. I'm calling a plumber because they're excellent in what they do, and vice versa. So in this market that's quick and crazy and fast, and you got to make decisions quickly, asking your coworker or asking your neighbor or asking somebody else just because they purchased a home before makes absolutely no sense to me. That brings me to another point, which is a hot topic for us in our industry, and it's not just myself, it is many people. When you are purchasing anything, or you're doing anything, buying a car, buying a house, getting a mortgage, doesn't matter what it is, there is a level of trust that you're going to have to either give or receive when it comes to a transaction that is, has an emotional attachment to it. And I'll use my industry as an example only because in my industry, trust is extremely important. So we could be best friends and I could give you a mortgage rate of, 1.7. And then you could go online, you could see a rate of 1.4 out there. And instantly, whatever I just told you, you're like, wait, what? How come? Why is my buddy giving me 1.7 when I saw 1.4? Because all of a sudden that trust went out the window. It's not that, I'm trying to put this delicately because I know there's people watching this that will probably go, hey, I did that. So here's the thing. If you don't trust that the person originally, whether it's the real estate agent, whether it's the mortgage broker, whether it's the lawyer, whether it's the car salesman, whether it's the person selling you magic bullet, whether it's a guy selling you a Scentsy candle, it doesn't matter. If you don't trust that they're looking out for your best interests and that you trust them, it's never going to work and it's never going to happen. Because what's going to end up happening is you're going to second guess every decision that you make or every decision that they're helping you make. You're always going to be thinking that there's a backdoor reason why they're telling you this. And when my example was when someone sees 1.4, yes, it's out there, but they didn't realize that their application didn't warrant that because of a certain criteria. And if that certain criteria had been met, they would have got 1.4. Or that 1.4 meant that they had to absorb these massive CMHC fees, maybe $12,000, $13,000, $15,000, $18,000 in upfront fees in order to get that rate, which makes no sense. So it just goes to show that when you have a ton of advice in your ears, it's very hard. There's a lot of noise. Now you don't know what to do. And that goes with mortgages, that goes with real estate especially. So in these markets, you've got to latch on to people that you trust, people that you know are steering in the right direction, and people that know and understand your goals and your plans. Because without them, it's white noise. It's just noise. Okay? So I'm going to get off the rant and slow it down a little bit and just kind of wind down this video into saying our market is crazy. Decisions need to be made very quickly. There are many, many people losing out on homes and getting very, very frustrated because they can't. And one thing I've always said, actually, my brother taught me this. If you want to go and buy a home and it's the house you want, don't try and get it. Get it. Go get it. Don't nickel and dime. Don't think, oh, I'm paying $5,000 too much. I'm paying $10,000 too much. If you want a home, don't try and get it. Go get it. Put the highest offer in. Get a little bit out of your comfort zone if you have to. Because that's the only way in this market, and again, only if you're looking to buy in this market, are you going to be successful. It has to meet all your criteria. It has to check all of your boxes. It has to make you happy. It has to alleviate all your stress. And it has to be something that in 10 years from now, you can see yourself, maybe it's sitting on the front porch. Maybe it's watching your dogs run around. Maybe whatever is important to you. Maybe it's that big garage to do your projects. Whatever that is, that's the value in it. It's not the value because someone said it was. It's the value to you. Okay? So that is my video today. I know it went on a long time. I was trying to go as long as I could without making mistakes. I made a few, but here we are. And I'll try to post some more videos to kind of maybe a follow-up as to what's happening in the market, maybe in a month or so. Give you an update on what's going on with mortgage rates and maybe some new projects that we have on the go that I'll start filming and show you where we go with those new flips, new builds, etc., etc. So stay safe out there. I hope you all are well, and we will talk to you real soon.